In tonight's video, I want to talk about the solar sector. In a video that I did earlier this year, when I was talking about sectors I was watching to start 2017, I mentioned the solar sector because of the bear market the solar sector has been in over the past 3 years. You can see this chart of the solar ETF TAN, where TAN broke out into a stage 2 bull market in early 2013, and the solar sector was actually one of the top performing sectors in 2013, which was a really good year for the overall stock market. And you can see this stage 1 base that formed, and TAN got above the 30-week moving average. And really, on the retest of the 30-week is where TAN started exploding higher. And you can see the big increase in volume here, and where TAN is starting to outperform the S&P 500. And this new stage 2 bull market produced multi-bagger gains for the solar stocks, and then it ended up topping in early 2014. And then the solar stocks went into a stage 3 top for about a year, oscillating above and below the moving average, and then ultimately going into a bear market in the middle of 2015, which has been ongoing pretty much ever since. Now, lately, the price action in TAN has been much more constructive. You're seeing more of a stage 1 base forming here, and I like this tight price action in this ETF. And it's been noticeable recently, the increase in volume on TAN, where we've done 2 weeks in a row of more than 2 times average volume. So TAN is kind of starting to look like something that could turn into a potential new bull market, but I think more needs to happen to really confirm that the solar stocks are turning around. Notice how the solar stocks still aren't outperforming the S&P 500. That's a key characteristic of a new stage 2 bull market, is the sector starts outperforming the rest of the market. So that isn't happening quite yet. If you look at the ideal buy point graph for an investor, that this chart appears in the book Secrets for Profiting in Bull and Bear Markets by Stan Weinstein. This is really what you want to look for the ideal stage 2 breakout, and the solar stocks just quite are not there yet. They're starting to look like they could be breaking out of the stage 1 base, but there hasn't been enough of an increase in volume yet, and they're still not trending above the 30-week moving average quite yet. And looking at the stage analysis screener, which is located at screener.nextbigtrade.com, if you go to the markets page and sort by markets in stage 1, this is something that I do a lot of times to find sectors that could be potentially breaking out into a stage 2 bull market when a lot of components are in stage 1. That ultimately sometimes leads to massive stage 2 breakouts. So if you sort by stage 1, you see that the solar sector is at the top of the list. And if I drill into the solar sector, typically what I do is sort by volume to see the stocks that are increasing by the most volume. And one thing to notice, that besides the TAN ETF, most of the other solar stocks still aren't getting massive upside volume that you typically see in a new stage 2 breakout. They're getting decent volume, but I'd rather see 2 times average volume or higher for a stage 2 breakout. And one other thing that's kind of negative for the solar stocks right now is the amount of resistance the solar stocks still have, because their stage 1 base really isn't that long. It's only about 5 or 6 months long. This percentage gauge is the number of days over the last 2 years that the price action is higher than the current price, and you can see that the percentage is still over 50%. So typically when you see it go down to less than 50%, it means that there's less resistance for a new breakout, and the solar stocks still have a lot of overhead resistance. Now, looking at some of these solar stocks individually, you can see SunPower how it started to form kind of a stage 1 base here, and has had pretty good weeks the last couple weeks with volume, but again still isn't quite yet above the moving average, which would signal the breakout, and it's still underperforming the S&P 500. First Solar had a strong week of volume last week, but so far this week, nothing really much is going on in the stock. Again, too early to call stage 2 breakout, and really the basing action in First Solar is a lot not as nice of a tight formation as in SunPower. Canadian Solar, kind of the same, similar looking chart a little bit to SunPower with the tight price action, but the increase in volume is actually a lot worse than the previous two stocks. Looking at some of the newer solar IPOs, SolarEdge, notice how it's been in a bear market with the solar stocks ever since it IPO'd. And again, kind of an increase in volume over the last couple of weeks, but still, not quite yet what you want to see for a stage 2 breakout. Sunrun is another IPO. Really, like nothing going on yet in this stock, even though it's kind of, again, putting in that stage 1 kind of drifting action. And then Vivint Solar, again, this stock had quite a significant bear market up until early 2016, and then has really kind of been in this tight range ever since, with no discernible increase in volume again, even though there's other solar stocks that are doing a little bit better. So overall, I think it's a little bit too early to call a stage 2 breakout in the solar sector, even though the action in the solar stocks is a little bit more constructive than it's been over the past couple of years. And I think the solar ETF is actually one of the leading ETFs so far this year. So I think it's definitely a sector to keep an eye on this year. I'm definitely monitoring the action in this sector. And, if things change and you see a big increase in volume and the stocks start acting like there's big buying pressure coming into them, then, there's definitely going to be, this will be a sector to pay attention to. One thing to note is that the health of the overall market has been kind of shaky over the past couple weeks. You'll notice that on the health page on the screener, the number of strengthening sectors is significantly less than the number of weakening sectors, even though the market overall is still barely off its highs. And I've actually noticed this over the past 3 weeks. This has been kind of the case. That's kind of a sign of a market that's having trouble continuing higher, and things can change, but that's kind of what we're looking at right now. And when those type of things happen, a lot of times sectors that start to look promising, sometimes they stall out because of overall heavy action in the major indexes. So again, overall, I think this sector is definitely one to pay attention to this year, but it's not quite there yet for a new bull market.